Welcome to Bears in Exile. Today is November 21st, and this is the market overview looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. So today was quite the day. We were down almost 249 points, more than 300 points to the downside at its lowest. Very awesome. And really great because, it certainly would appear that we are getting away from that awful little 200-day moving average, ugly little step thingy that we had going. We did feel that it was going to break to the downside, which it appears to be doing, and I'm glad that it wasn't to the upside. Although the most important thing is definitely a directional move in either direction that we can play. So very good. Excellent, actually. Um, so what do we see today? Well, of course, we had the real body of the candle just demolish the bar. Although that doesn't exactly count. What we care about, for the most part, is the short-term moving averages. And we are completing the crossover, but we did not get full separation prior to entering the bar. So that is a strike against it. But we're already making massive penetration on the shortest term moving average, the fastest one. So, man, that's a strong move today. But anyways, middle Bollinger Band above the short-term moving averages. We came close to retesting the major price consensus level for the current month at 11,400 roundabout. Almost got there and backed away. That's fine. You can't, Rome wasn't built in a day, and well, maybe it can be destroyed in a day, but nonetheless, it's not going to be just a rocket to the bottom. Beyond that, we have the 14-day RSI moving average, the most important indicator. Clicking on down, finally getting out of overbought territory, and this is the area where it normally will accelerate. However, contrasting that, we have the CCI very low, we have the stochastics getting down there. Slight uptick on the RSI, downtick on the histogram, downtick on the MACD, and just to take a different look, volume at price, we can see we have this area where there was a lot of buying in the past month, and along with its major line. We almost got to the major line, but look how much of this area it just chewed through. It actually closed through a good third of it already. So that's really neat. And the penetration is damaging, but it's a pretty good chunk. I mean, that line at 11,400 extends pretty much 2 months worth. So that is a major line. Now, if that were to break, the only thing we have to really catch it is down here at the 1100 area. And yeah, there's a little bit of a chunk there too, but really, this is the key. This right through here. So looking to see what happens. Maybe it'll get a little bit of a bounce at this point since there was so much buying pressure. Maybe there'll be some relief to the all the bad news. The super committee failed. Now they're trying all kinds of shenanigans with that. And of course, Euroland is... they don't have Thanksgiving, so they're continuing to work on at least making a headline to improve their situation. But the daily looks poor, and let's take a peek here. Here's the 180 time frame. You can see that we are breaking down. It got a little bit of a kiss over the last couple of days and is moving on down. Stochastics pointing down, 14-day RSI moving average pointing down. Notice that they're already getting kind of low, along with the RSI. CCI is trying to work itself out. Side tick on the histogram, down tick on the MACD. But nonetheless, if we were to blow this up, we do have some minor excessive separation. And yeah, I could see this very easily going back for another retest of the bar, perhaps. But still, what I care about most is the stochastics and the 14-day RSI moving average. They are getting low. So at some point you would think that they will move up, and we'll get a bounce of some sort. SPX. This one is even more bearish than the Dow by a good margin, simply because we are busting through the very minimal bullish bar, and we got below the major price consensus level for this month, the upper price consensus level for the previous month. We pierced the lower price consensus level for this month and backed away from it. This is very bearish. 14-day RSI moving average, all kinds of room to move. Stochastics getting very low. Downtick on the histogram, downtick on the MACD, uptick on the RSI, downtick on the CCI, very low. I would not be surprised to have a lot of people think that this was overblown today and get some sort of a counter move tomorrow or Wednesday. Wednesday, the talking heads are saying that there's always a rally, so I don't trust that. I would actually trust more the idea of them front running Wednesday on Tuesday, and then Wednesday everybody finds out that everyone already bought and is waiting to sell. So that's my prediction, but we're going to see. The VIX. The VIX was a massive disappointment today. It was stated in the daily running thread how it was performing poorly. I mean, we closed yesterday at 32.91. No, I'm sorry. We closed yesterday at 32. We closed at 32.91 today. That isn't much of a move, and having it back away from these series of tops before it even gets close is not really encouraging. 14-day RSI moving average, yeah, it has lots of room to move to the upside. Slow stochastic still pointing up, still has lots of room. Fast stochastic pointing down. Uptick on the CCI, downtick on the RSI, downtick on the histogram, and a slight uptick on the MACD. Very poor showing. I am not impressed by that. We still have the middle Bollinger Band below the short-term moving averages. We're still above the major price consensus level for this month. Maybe we'll have some follow through tomorrow. But if they do end up front running Wednesday tomorrow, then I'm not exactly sure what to expect from the VIX. TNA, very nice day on TNA. Extremely nice. We had said that we were inside the bearish bar, turning it into a double flat line, attempting to, and double flat lines break out hard to one side or the other. And certainly the short-term moving averages are breaking down from that. Middle Bollinger Band line above the short-term moving averages. We got below and closed below the major price consensus level for this month. And CCI very low, stochastics low, downtick on the histogram, the MACD, uptick on the RSI, and 14-day RSI moving average. It's just getting underway. So the real question becomes, are the stochastics going to reset and meet the 14-day RSI moving average? That is the million-dollar question. UUP spinning top. Oh yeah. But look, we don't have a downtick. We don't have excessive separation. It is uniform. We don't have much in the way of wobble. It is pretty. Short-term moving averages all pointing up. Middle Bollinger Band below them. CCI, yeah, getting high. Stochastics getting a curl. 14-day RSI moving average, lots of room to move. Downtick on the CCI. The MACD histogram, uptick on the MACD. So with this indecision candle, what do we really have to work with? Well, most of the intraday time frames are looking good. I'm going to go to the 60-minute, see what we're looking at. Slight uptick on the histogram, side tick on the MACD, side tick on the RSI, mixed on the stochastics, down tick on the, actually pointing down on the 14-day RSI moving average, and slight uptick on the CCI. So this is really interesting. When you have the RSI moving down, or up for that matter, and the prices are staying consistently the same, That's really good because once this gets to the bottom, wherever its bottom is, and it turns around, then you have decent moves on the other side. So I like this. And FXE, there was one really weird thing about today, and it was pointed out in the daily running thread, which was the euro was holding pretty steady during the whole move down. And I mean, yeah, it had the intraday fluctuations, but at the end of the day, it was at 1.35, and for the move down, it really should have been lower. So either the indexes were wrong or the euro was wrong. I tend to think that the euro was wrong. We didn't end with the spinning top. We have the short-term moving averages pointing down, middle Bollinger Band above them. We're below the lower price consensus level for the month. 14-day RSI moving average, all that room to move. Yeah, the stochastics are low and they're trying to get a hook. We don't know if they're going to actually get a full move up to the 14-day RSI and then turn around with it. But regardless, if we were to go down further from here, say to the 1.33s or the 1.32s, we're still going to see hundreds of points on the Dow get taken off. Uptick on the histogram, slight downtick on the MACD, uptick on the RSI, downtick on the CCI. Could be very interesting to see what this does between now and Wednesday. And GLD also pointed out in the daily running thread that GLD was just getting beat to a pulp. And what an ugly big red candle this is. Got below the upper price consensus level today, middle Bollinger Band above the short-term moving averages. They are having a very ugly cross as they break the bullish bar. Well, what exists of a bullish bar. 14-day RSI moving average, we were leery of this with it leveling out, and today actually getting a downtick. Stochastics on the way down, CCI on its way down, RSI on its way down, histogram, MACD, all down. You would think that uncertainty is increasing, so this should be going up, but people are liquidating to cover their bad positions. So that, in addition to a stronger dollar, I guess is just more powerful than the uncertainty. So that 14-day RSI moving average hook, though, that is bad news for gold. SLV, more of the same. Not a big ugly red bar like gold, but we are below the major price consensus level. We did end with a hammer. Maybe that'll be enough for a small reversal of some point. Middle Bollinger Band above the short-term moving averages. We have the hook that we identified a few videos ago with the 14-day RSI moving average. Stochastics going down. We do not know if they're going to turn around and meet up with the 14-day or not. Downtick on the CCI, uptick on the RSI, downtick on the histogram, downtick on the MACD. Not attractive. And just as a little extra to try and understand what the market is doing, here is GE. Normally GE can be a reliable indicator when the Dow is in doubt. We can see that it is breaking down from the essentially a flatline bar, becoming a newly forming bearish bar. Middle Bollinger Band above the short-term moving averages. Do have a little bit of separation and wobble, nothing too severe. Did close below the lower Bollinger Band, massively down on the CCI, the stochastics, downtick on the histogram, the MACD, uptick on the RSI. 14-day RSI moving average, look at that. All that room to move. Can also see that it kissed, or almost kissed, the lower price consensus level for the previous month and backed away slightly. But if that is broken, then definitely it should be going down to test the previous floor just above $14. But being outside the lower Bollinger Band, unless it's going to get a massive move down, it should attempt to pause and let the Bollinger Band reset. So there it is. Not looking good for the bulls at the moment. And wow, we were expecting and hoping to move down, and here it is. And we're still thinking that 11,400 is going to be tested, and if that breaks, then 11K. That is what I'm thinking. And there you go. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.